Hello ladies and gentlemen, and welcome back. In today's video, we discuss everything to do with the stock market, crypto, and commodities markets right now, but specifically we focus in on the big news, the calm before the storm. We know markets fell off. This was expected, but we're back to what we would call a very important demand zone. Behind these candles here holds liquidity. That most likely means there are potential stop hunts that could happen over the next 24 hours into the Friday trade session. So what happens here becomes incredibly important. Will we rally and then drop later, or will we just drop straight through to some of the areas that we've been focused on? Stay tuned, guys. We've got a lot to talk about today, and we really get stuck into these charts. A lot of good stuff coming your way. See you soon. Well, welcome back everybody to the Daily Show where we talk about markets around the world. We'll get started here with the stock markets and how they performed. And then of course, we'll get into the deep charts of the lead indicators, the stocks, the commodities, indices, and cryptos. Well, what happened? Well, it was a bit of a rally at the start of the session, followed by pretty lackluster kind of movement throughout the day. This pointed towards coiling of the market, or basically the market staying firm until it's ready to make the next move. If we're looking underneath the hood though, some things happened here that were a bit interesting. Energy spiked up heavily. We did discuss oil in the last video. We'll talk about it again. It looked super bullish and it had a great day. XME also did well along with all the metals and gold. But what didn't do so well, XLV, utilities, and of course staples. The defensive sectors that have held up so well and kind of, I guess you would say, tipped us off to the market probably turning around, are suddenly underperforming. If you have a think about it, XLP, XLU, and healthcare have been some of the best sector performances. Yes, I know they're down, but they've been some of the best sector performances over the last 5 days. That helped us to realize that the market was starting to get out of the other pairs. Now, if we start to see the market go back into technology while the market's doing this, what does that mean? A potential upside is coming. We have to be open to that concept. Even if you have a negative bias, and I see a lot of you in the comment section down below saying 3,900, 3,600, 3,700, I get it. It's just you've got to understand there's ebbs and flows. Trading on a very small time frame versus a swing trade versus options, they're all a little bit different. You get to the same levels, it's just how you get there is important. So just remember, different ideas all are usually successful if you know what you're doing. August, September, some of the worst months of the year in midterm election years. Do remember volatility spikes around this time as well. You'll see the media has started talking about it. What a surprise. We're suddenly there. That's suddenly one of the excuses they're coming up with it. Here's a bit of a high res chart for those correlations we've been discussing. Both bullish and bearish correlations to previous periods in history. Some really great stuff here. And of course, in these correlations, it's kind of all pointing towards the double dip or a new low scenario. So in both cases, don't have FOMO on stocks. There's not much reason when you have the strongest correlations with previous history, all including double dips. I always like to think of it as come from an abundance mindset. It should help you out. High yield bonds. The McClellan oscillator here showed a record high, excessive optimism. Everything was like, yeah, it's good to go, guys. Well, when you get a really big reading like this, it leads on to bonds, especially high yields, performing pretty lackluster over the next couple of months. This could also be a bit of a warning sign, like we've discussed, with the market having that doubling dip or even new low scenarios. Both of those become more likely as we've gone a little bit too hard fast. And of course, that leads us into that concept. The VIX, what's happening there? Well, the volatility index, as we've discussed, the 20 level being critical. VIX buyers be incredibly happy with themselves. If you've been following the channel, if not, subscribe. But if you've been following the channel, 20, 20, 20, super important level. It's spiked back up to 24. We didn't see it even really drop in the previous session, considering that stocks were dropping across the board. So it just shows that it can hold up. And at this stage, fear is coming back into this market. What about the yields? Well, I was just doing a bit of a correlation there with the previous periods of stock markets. And you can see here that when the US 2-year goes up, the S&P 500 here generally does go down. Now, we're at a critical peak. Notice over here, very critical level. If we go down to something like the daily, you'll notice it's right on that high, just ahead of the news, the Jackson Hole Symposium. We'll end up finding out whether this thing spikes through. But if it does, and you set an alert, let's say for 3.4% on the US 2-year, and you get above that level, you have to expect the stock market not to like that over the next coming days. A new high generally correlates with weakness in the stock market, especially from the 2-year. The Federal Reserve controlled the short date. The long date is controlled by the market. Remember, they are separate. US 2-year, US 10-year, separate things. But in both cases, if we see spikes in them, expect weakness. If we see them drop, expect strength in the stock market overall. It's a good little lead indicator. What about the US dollar? Well, a lot of you would know we're back at highs, so I'm not even going to show that chart. If you load up something like the daily 20 moving average, you'll see we're quite far away from the mean reversion. But I want to focus in on this price action here. We went peak, trough, held that level a little bit, higher peak, trough. And if you're in our private community, you'd know that I talked about this being a bit of a switch point. And the market just fell straight through that level and just dumped. The good news and the bad news is that usually would have correlated with a bit of US stock market strength, and it did initially. But then, of course, once you fall off so heavily with such bullish intentions behind the US dollar, it generally will pull back up. If you're looking towards shorts, that 108.90 to 109 level is going to be a critical zone to focus in on. And markets might be pulling back to around a golden fib around that level as well. 61.8 fib should be there. So if the US dollar is going to weaken, this is the place for it to do so. And the main reason is how high it is and where it is. It hit that equal high with the previous July point period. Generally, markets weaken a little bit around this time. They structure up a little bit more, creating kind of like this. And then if they break out, it's huge. I've also seen a ton of articles coming out. The easiest trade in Forex, they call it, buy the US dollar. Yeah, it was easy when we reported on it in these levels here. But at this point, yeah, I don't think it's as easy as it once was. Maybe you'll disagree with me in the comments. Of course, this came over to the euro. The euro ended up creating a long leg doji. This is an equilibrium point or an indecision point now. It's one of those areas where you usually see the market now structure up a little bit, potentially even rebound because it's been such an aggressive short, gives a bit of mean reversion potential here. Retail traders got very stuck in this trade. They were incredibly short, and I mean incredibly short. I'll give you an updated reading on how many retailers were short. So they were upwards of 91% in terms of long. Well, sorry, what I mean is long. Now they are 82% long. So that's actually dropped quite significantly. A few more retailers are short. And what I meant by short is they were shorting the US dollar and longing the euro. Well, that didn't work out for them. They're starting to switch that trade up, which is usually a good sign of it starting to bottom. And we'll talk about that more in the next coming days. Let's move over to US oil. What's going on there? There was the spring. Amazing big spring. Have you picked it up off the break here? Congratulations. If you got it in the spring level, even better. Well done to you. Very nice trading there. And of course, we saw the market rally in the previous session. 95 is the key zone. Now, if we break through 95 and we get a closure or even break through it, that's a fairly significant closure and level. We might pull back past that point, but it kind of opens and exposes 102 to 104 per the barrel. So there's a real chance here that oil actually has a bit of a resurgence over the next coming days and potentially weeks. If we have a look here at the weekly, you'll notice the wicks, the demand coming off these zones, similar to other demand areas. And generally this bodes well for a bit of strong oil. Now you'll know my long-term concept is, of course, weakness on oil. But as a trader, the short-term timeframes are showing a little bit more strength than you would suspect. And a few people in the private community, and I noticed a few people got this trade, they were in these types of positions. And that spring zone here really does bode well for continued strength through oil. You can also see it potentially even in the copper trade. The copper trade came off, took the lows here. So there was the low, there was a low. It swung those and it started rallying. And it's so far so good for this one. It has taken the high now. So you can see here it's kind of got through that high. Again, you'd be looking for short time frame potential switches in this area, focused on something like a 380 on copper. We'll find out whether that can happen. But yeah, it's an interesting point in the markets. We'll move over to gold. Now, I have been talking pretty negatively on gold in terms of the short term and bullish on the long term. Still think it's possible for gold to get back down to this level. We'll find out really probably through the Jackson Hole Symposium what gold wants to do. It no doubt will be affected. Kind of remaining here at that 715, 1720 area with even the potential of it coming down to the 1700 flat. As I always say, have patience, react, don't predict. If it doesn't hit perfectly on your level, then it wasn't to be. There's always another opportunity. What it did do was it came back down to the Fibonacci 61.8. That was probably the first level that you could have said, oh yeah, this fib is pretty good level for us to potentially target. It did hit that, it bounced. I'm not seeing enough signals yet to say, okay, this thing's in a full-on rally back up. So we'll just continue to maintain the patience for now on this one. Let's get into the stocks. So Tesla actually held amazingly well. That 860 level clearly did very, very nicely. It filled the first gap that was left over and kind of just sold off a little bit at the end of the day. Good little trade there. If you picked it up on the Friday session, congrats to you. And even if you got it in the start of the session, congrats to you as well. It was a good little trade there on the way up. Still have a gap here. And we still have highs through this zone, and we're still basically in a giant range. So if you're going to trade a giant range, know your volumes, know your areas, fixed range volume profile, put it up, and you'll notice that, of course, the key big resistance is 915 in terms of volumes. And then we have that level down here, which is where we kind of got to the other day, that 850, 860 zone. Everything here is important. It's mostly small time frame trading on Tesla, which really reduces you to having to say, okay, well, what am I going to do? I'm going to have to get into the small time frames, and I'm going to have to like trade the 1 minute, 5 minute charts because I'm in a bigger overall range, or wait and be patient for the key levels to be hit. What about Apple? Continued weakness here from Apple. There's still a gap to be filled. Maybe we fill and then pull up in the stock markets to fill the ones left behind. We'll find out. But Apple continues to weaken here, and it's all in line again with certain volumes. If you think about it, where do we expect Apple to find some form of buying pressure? Well, of course, around that 165 zone, right on that gap fill. So this would point to the stock market going a little bit lower here, then ramping up, and we'll talk exactly about that in just a few moments, because this is a pretty key level here for Apple. Fill the gap, then potentially ramp. We did mention, of course, before that we have high yield bonds showing weakness. Here's the high yields over the last couple of days. Again, weakness here in the market. We reported on it last week. It helped us to really get that idea that the stock market was probably about to turn over a little bit. It did so. Now, high yield bonds could continue, even with rallies, to continue to weaken over the next month to 2 months based on data and stats, possibly put in a low or around these levels again, and we'll find out what happens next. These will move heavily, though, over Jackson Hole Symposium, so be careful, even in high yields. What about the DAX? It's right on demand. This is our zone. Previous level, very huge zone. You can see it consolidated here, it created a flag, it ran into our trend line. That was pretty fantastic stuff. It's exactly what we wanted it to do. Trend line, trend line, trend line, currently on demand. So if the DAX is going to turn, especially if oil does well and some of these things, FTSE, DAX, ASX, they could all be seeing some relief if this was to occur. Again, the trend could still be down, but what we're saying is something like this, this. That's what you're thinking about. You've got to be prepared for that to happen. What about the US 100, the Nasdaq? Is it showing any difference? Not really. Again, volume profile over the last move. We're right at that level, obviously getting ready to potentially swing the lows here. Notice we made I think it was an equal low. Let me just check this. Yeah, equal low here at 12,806. What if the stock market goes something like that? Very good level for it to do so. Be careful for the traps, guys. We now have the 13,000 high. We now have that 12.8. If we go ding and then ding the 13,000, the bulls are most likely back, pull back, and then rally up for a little bit before probably coming back down again. The idea would be rally into drop. So it would look something like this. Jing, bing, then boom. And you have to be open to it. Again, a lot of shorters will lose commitment here. And that's the whole point of the market. It's ready to trap you, and that's what it's all about. Let's move over to the S&P 500. Now you'll notice I have 40.73 highlighted. There's a gap here. There's also a gap at around 40.90. There's also lows that sit behind here. There is big things happening in this level. The real question, and the million-dollar question in some ways, is exactly where does it turn? And again, patience and reaction, not predicting, becomes important. And why we say there's a chance of turning here is because this is a critical zone. We've seen it before over here in June. We've seen it here before it busted through. And markets usually like to do this getting down to levels. Now, I might have an aim of 39.20 or 3900 in the future, and I'll explain that in other videos. Subscribe if you're interested. But this is still a critical zone. Let's dive in to the smaller timeframes to understand it better. So in the previous session, it ramped through this area. And admittedly, I thought, okay, this could be the start of something good. Pullback into ramp again, which it did do, and it didn't get past the 41.62. Damn, I thought, that sucks. And of course, then I went to bed because I'm from Australia and it was about 1 a.m. in the morning. But what that meant is it didn't get through the 41.62, this little bit of most likely supply that sits over here. We now have more defined zones in the next 24 hours, and they're pretty wide, but it is what it is. So if we zoom this out a little bit, let's go out, we can see the lows. Look at this, 41.12s. Now we haven't touched or gone under those. Again, similar to the Nasdaq, what if we pressure these lows? Boom, and then move up. Guess what? You better be paying attention to that, because if it does happen and then we ramp through this, do that kind of thing, you've got to be prepared for a 42 plus at some point. Now you might not like that. You might say, Tom, I think this is bearish. It's going all the way downtown. It could, markets can do that, but you've got to be willing to get the switch in. And of course, this is a good level for a lot of shorters that don't have fixed stop losses, plans, etc. to be taking profits. Why? You know, there are three monster levels here: 40.80, 40.90, 4100 flat, and of course the 4110. All of these levels matter quite a lot. Now, if we move around here, this is where we'll see that activation and then potential movement back up to maybe even the 4250. At that point, weakness into something like a 3920 would be very sweet. It's a standard way that markets move. You've got to think about how have markets moved in the past. They don't just generally go on beaters like this where they go all the way down. They generally go boom, 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 you know, standard markets. Peak, trough, high peak, high trough, high peak, high trough. That's the move you've got to be more aware of. So when you're expecting things, you've got to focus in on an area and say, is this an important zone? In my opinion, it is. Could we be wrong? Of course. Do you set alerts for these kind of things? Absolutely. And guess what? If you're net short, you hold your shorts if that's so far the plan. You've just got to stick to your rules. S&P 500 max pain matters way less this week, but we'll still look at it. Of course, 24,000 units sitting around the 410. Funny where we are right now, yeah. Right around those kind of levels. 416 is the max pain, it looks like. So it's coming down. Again, that's consistent with a few people going towards that bullish side. Max pain here on the Friday, 417. Calls sitting right on that 430. So incredibly unlikely we're above that by the end of the week. And that 415, 410 seems to be where the puts sit. What about Bitcoin? This thing's holding amazingly well. Continues to structure at a point that I would hope it does so. If Bitcoin again swings the low and then comes through, that would be a strong move towards the bull side. At this point, it looks like it's kind of accumulating, creating a bit of a wyckoff, a breakout past, let's call it 21,800 should expose something like a 22.8 or even a 23. And I'm actually aiming for like a 23.4 should it go long. So again, if the stock markets go long, crypto could go long and then come back in short. Even if you have a short bias, you have to be open to this location. Another thing it could do, swing the high, dump, make a new low, set an alert for the low. If that happens, guess what? You can sit there with your smiley face saying, look at me, I'm a 19,000 for Bitcoin. I wouldn't be surprised at all. Be open to both scenarios. That's trading. As an investor, you're probably more looking towards the longer term. As a swing trader, you're looking for key points that you stack the odds in your favor. If you haven't already been following us, follow us over at FX Evolution on Twitter. We're doing a whole bunch of polls, sharing information, charts, everything like that. If you want to join our private community, you can do so. Links in the description down below. free 7-day trial to join it. Come have a look, hang out with the community, get some great ideas. And of course, we also have our public Discord with over 10,000 of you guys sharing ideas daily as well in there. Week ahead news, prelim GDP, whatever. That's on Thursday. Not much going on Wednesday here in terms of the overall big bits of data, some durable goods, etc. Then we have the Thursday Jackson Hole Symposium all day. And then, of course, Core PCE Price Index, 8:30 a.m. New York time, into Fed Chair Powell speaking. Subscribe if you're interested in following out more about the channel, what we're doing. And, of course, we'll have a special coming to you about the kind of things that we expect to happen at Jackson Hole. It's all about really that news. The market is coiling or sitting here, but still there's opportunity if you're patient enough. See you soon, guys. Bye for now.